Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a fantastic day. We're taking a look here at XRP, see what's going on. We just broke through our local high here, basically price discovery in a lot of ways at 290 plus. Very, very careful in situations like this. It's important to recognize that price discovery is a very unique and strange thing, and it can cause a lot of heartache. So, just friendly advice: careful trading into these type of breakouts because it can definitely get kind of crazy. In other words, trying to find the top and trying to short the top is generally a bad idea. Okay, so try not to just be one of those persons that's shorting because it's overextended. That's just a stupid, dumb thing to do. And I'm sure this time tomorrow the price may pull back, and you're probably going to feel like a champion, posting online, social media, how great you are with shorting a high risk trade. Right? That means nothing though. That's not. If that gives you validation, then I'm sorry that you like that, and you're probably in the wrong place because I don't really care for that kind of stuff. Anyways, I'm not gonna tell you what you want to hear. I'm gonna just look at the charts abstractly. Anyways, quick congrats to our community members for some nice profits from Bitcoin long, 31%, Dogecoin 22%. Bitcoin 10x leverage trade, 5x leverage trade for everything else. So just know that if I ever take a trade, XRP for example, I'm only going to ever 5x leverage because it's low inherent risk or lower, right? And it's just something to kind of recognize that too high leverage is just a bad problem. I think it's a disease in the crypto market right now, and we got to fix it. So again, just teaching best practice is usually what I like to do to offset that. And only ever, even if you're following my trades in my community, only ever use proper risk management with low leverage trades. Okay. Anyways, just kind of throwing it out there. So take a look here at liquidation. We can see some heavy pockets, 286 and then 307. So those are two numbers to kind of recognize. In other words, hypothetically taking a long at 286 and then maybe a short at like 307 as a rough estimate. Those may be good considerations. I'm only referring to quick scalps in and out of the market. Okay, and again, liquidation isn't a guarantee, but if you come closer to those ranges, the likelihood of them getting hit is higher. Okay, so just something to be mindful of. That's just kind of where we're at for the last 7 days. Liquidation delta is high, not super high. We're only at about 3 billion, which sounds like a lot, but it's not much for this coin. So the truth is, we're not overextended by any stretch based on liquidation or just the overall sentiment here. Okay. Again, probably likely just building more volume at this previous resistance turn new support, and we're likely to see the price continue higher from here. Again, price discovery is a funky thing, folks. Be very, very careful trying to short what feels like the top, because the top isn't in yet. You really only want to short when an established top is in and is retested. That's a different story altogether. We're not there now. Okay, we passed that threshold already, right? Having said that, though, we can see right here at about 255 and 267 are the two most largest areas of interest for people who have taken longs here recently, minus the late longs at 293. Okay, so 293, they're kind of slightly in profit, but I don't like to be a late long personally, but there's a lot of FOMO right now based on some fundamental catalysts going on with XRP. So if you want to know more about that, our community members are chatting about that in our community. But again, we're going to strictly talk about the technical analysis here today based on the charts, not necessarily a fundamental catalyst, but keep in mind today's CPI data positive plus the rumors of XRP, all that stuff. Again, that's factoring in positively here. Okay, again, all the more reason not to short into it. Having said that, though, 255, 268, those are two areas of support based on previous buying pressure, because the likelihood of the price action going lower than that is quite low. So we do see a price point in that range again. That may be a good consideration to dollar cost average. We take a look here. You can see a decent amount of fair value gaps still being established. So capitulation, natural pullback would make sense. I'm not proposing by any stretch we're going to see this, but we could be at the beginning of a little bit of a head and shoulders pattern. Again, just throwing it out there. Patterns mean very little if everything else is offsetting that. So don't take what I just showed you there as gospel, right? So if we take a look here, we can see we're now above the local high, the highest high basically of 290. And then if we take a look here, of course, we can recognize we're above all moving averages. Very good sign there. We've broken through 70 on the RSI, generally implying price discovery, or more importantly, sorry, we already know we're in price discovery, but when you break above 70 on the RSI, that generally implies that the price could go bonkers at any given time. In other words, if you look at the last time we broke above 70, it was November 11th, okay? So to give you perspective, November 11th was this guy right here. This is November 11th, and look what the price did from there. Granted, that was also a fundamental catalyst, right? But the truth is, we stayed above 70 for quite a while. And now that we're above 70 right now, there's a decent chance we don't look back and the price continues higher, right? So again, those FOMOs at 293 may not seem like such a bad idea, right? Again, I prefer to wait for a lower price point, but we may not see that depending on how this plays out. Other way you look at it, MACD is converging. Money flow index is trailing behind. I don't love that. Doesn't imply that we have a ton of buying pressure, but it is increasing. Okay, because again, you look at these candles here and how much volume we saw previously. It pales in comparison to where we're at right now, right? But again, you got to recognize the price is higher, so people afford less, and in turn, volume is going to come down. So there's kind of a bit of an offset there. 4-hour time frame. Let's recognize this here. We're above all moving averages. Absolutely nothing here letting us know that we're going to pull back. Still over 70 on the RSI. You generally don't short into that. You may consider securing profits on a long if the RSI crosses back under 70. I talk about that in my RSI video, I believe. And just generally speaking, I'm going to communicate that in every way, shape, or form to try to reiterate the fact that being above 70 on the RSI on either the daily or the 4-hour are extremely good things to see, and you never try to short into that, or you never try to you never close your trade until it crosses that threshold. Right now, we're kind of in this new mode, right? And XRP is discovering what it can do here next. So based on local highs and fib levels, this is kind of a bit of a forecasting tool. We can see roughly $3.20, I'm rounding up a little bit, is the potential next area of target, or more importantly, of retracement, whatever. Basically, whatever word you want to use to describe it, the likelihood of the price going up to that level and initially rejecting is higher than not, right? So again, folks always like to ask me what the next targets are. 320, 333, and 355 is some easy round numbers to remember. Those would be good consideration for profit targets. Keep in mind, fib levels are just purely guesswork, but it's based on previous data and just how often the coins will retrace those levels. Their consistencies is all. So that just increases your odds of success. So generally when I set profit targets in price discovery, I'm going to set targets just below these key levels. So 318 instead of 319, 330 instead of 333, right? Different areas, so that way you're not getting in line with everyone else. You're getting in and out quickly, right? That's the whole concept, right? You want to get filled if you're going to set a limit order. And you should always be setting limit orders. Taking market orders is a very bad idea unless the price is moving really fast. So to anyone who is using market orders over limit orders, just know you're paying a lot more in fees, and there's you're getting a lot of slippage too. You're not getting in and out at that exact level. All that being said, I'll update our fib levels here shortly. I'll post a playout chart on our Twitter, Telegram, and Discord. So just know this is all here for you in case you want to tune in. I do also provide my monthly results here for our trades that we take as a community. So again, that is there. But I'm mentioning that because again, I haven't updated our fib levels yet. I generally like to wait for the daily candlestick to close first before I do that. Having said that though, hourly time frames confirming there's no reason to short this coin. Green lights on every single front. So we've seen like 98% of the chart here, letting us know that further upside makes more sense, and to take a short right now is a bad idea. So heaven forbid the price were to pull back, good consolidation areas would be 270. That's our local fib and local high. And then of course, this 250 to 260 range is a rough estimate. Once again, I'll highlight those on our new playout chart. So the easy way to understand it here is if you do take a short position, you go into and you're successful with it, which is still possible from a scalping perspective or slight potential for a swing trade. If that were to happen, I want you to know that what you did was wrong. Okay, and I'm saying what you did is wrong only in the simple sense of, as a professional trader doing this day in and day out, you shouldn't be taking those kind of trades. That's all there is to it. And I like to reiterate that and reaffirm it because most people are newer traders watching my channel, and they seem to think that high-risk trades is like the only strategy in crypto. It's not true at all. You can sustain and do very well in the market if you're conservative and you wait for confirmation. So do you want to take a long right now? I would say no personally. That's just my own sentiment. I don't like to take longs at the top. But again, you absolutely do not take a short right now. That's the simple way to understand it. So me, I'd much rather wait for an entry here, like just say 285, the local high, and then possibly even secondary that 270, kind of average in instead of just trying to take a long right now. And I don't care if that never happens and I miss my opportunity, right? Because I'm already averaging this coin a long time ago. But the whole point of me mentioning that is that you got to get used to missing opportunities. You're much better off setting a target that never happens versus FOMOing into something that is high risk. Okay, so just please understand that. Cool. Anyways, that's the general consensus. I hope that I clarified that correctly. Thanks so much again for joining me here. I'll clean up the charts, post a playout chart on our Twitter, Telegram, and Discord. And we'll look forward to seeing you all in the next video. Have a great rest of your day. Take care.